Hello and welcome to another edition of For the Record. I'm Sean Murphy. My guest today is Beverlyn McDonald. She is the Public Affairs Specialist with the Small Business Administration Office of Disaster Assistance. We'll meet her when we come back, so stay with us. Welcome back to For the Record. I'm Sean Murphy. My guest today is Beverlyn McDonald. She's a first-timer on the show. She's the Public Affairs Specialist with the Small Business Administration Office of Disaster Assistance. First of all, welcome to the show.
Thank you for having me.
So for those that don't know, the Small Business Administration, what is it? Along with the Office of Disaster Assistance. Let's talk about your job and what you do.
Okay, basically the Small Business Administration Office of Disaster Assistance provides low-interest loans to disaster survivors affected by the latest storm, Sandy.
Sandy was the latest, of course. Now, is this FEMA, or is this different for FEMA, or is this in addition to, or something else entirely for people? Because when they think of disaster relief, they think of FEMA. So talk about that.
This is in addition to FEMA.
Okay.
Basically, if you have insurance, SBA covers your uninsured, uncompensated losses, okay? Whether it's for your business, your home, or a renter even. We cover uninsured, uncompensated losses.
So because a lot of people may not know, FEMA certainly doesn't cover everything. There are certain guidelines that certain things that they do cover, but unfortunately there's a lot that they don't, and that's where, you know, this comes in very handy. Right.
FEMA only covers the bare necessities, okay, whereas SBA will provide you with the funds to actually repair or replace your disaster damaged property.
Now, someone like you, obviously Sandy wasn't that far in the past. It's still certainly in people's minds. There are certainly areas even around here, and of course we know about New Jersey and places where they're just, you know, it's going to be a while before they kind of get back on their feet and get back to sort of life as usual. Are you noticing that this was, you know, Sandy was particularly damaging in a lot of areas and in a lot of people's lives? Talk about that a little bit.
Well, the thing is, each disaster is different on its own. It's like a case-by-case basis, basically. And every disaster carries its own little particulars, so you can't really compare one to the other. That's like apples and oranges, can't do.
And we were talking off the air, because you've traveled all over the country. I mean, you were just talking about being out in Washington, and just there, like you said, that's exactly right. Things are different. They're very particulars to each situation, but you've seen it all, though, haven't you?
Well, after 20 years of service,
yeah.
You get to see a little bit of everything.
Now, when someone needs this assistance, how do they go about, what's the first thing they do? Because after disaster, people are very confused. They don't know what to do. They don't even know, you know, the first call to make or who to reach out to.
Right. The very first thing everyone needs to do is register with FEMA.
Okay.
You need to register with FEMA, whether it's in person, online, or by telephone. You need to register with FEMA. You need to have your name and your information in the system. That's very important.
Yeah. Now, as this show airs, you know, it's very, people may not, even at this point, may not know, you know, what to do, what programs specifically are available to them, and I know that you have some. So I want you to sort of get right into it and talk to people about, almost maybe sort of talk them through, what are some other things that they should do?
Okay, basically when it comes to the disaster programs, like I said, the first thing you do is register with FEMA. And if FEMA cannot help you, or if FEMA only helps you a little, then they will refer you to SBA or some other agency, okay? And then what you have to remember is, once you register with FEMA, FEMA is subject to send you an SBA application.
Okay.
They send you an SBA application. We ask that you definitely fill it out and return it. You see, with the SBA loan program, we ask that people, homeowners or renters or businesses, whichever, do not wait for their insurance settlement. See, what it is you can have FEMA working for you, you can have SBA working for you, and your insurance company at the same time.
So there's not any overlaps, or two different agencies or insurance companies paying for the same thing?
No, there will not. That's called duplication of benefits. That won't happen because this is the way it works. FEMA, let's say a lot of these people only had flood insurance, and the flood insurance only covered the dwelling. It did not cover their contents, and it did not cover a lot of other things. For instance, loss of use, which is a segment on your homeowner's policy, is not a segment on your flood insurance policy. So therefore, FEMA, if you could not live in your home, okay, then FEMA would give you assistance to live somewhere else, okay, and then you still, after you applied for FEMA, you get the SBA application, you call your insurance agent. You have your insurance agent out there, and you have the inspector to inspect and everything and write up. In the meantime, you're having SBA's inspector out there as well, and a lot of times what ends up happening is the SBA loan will come through before the insurance company settles.
And that's very important, because there's a lot of times where just through the insurance money may take a while, and there are people that will need the money sooner than what the insurance will be able to get it to. So the SBA is a lifesaver for some people.
It is, because what will happen is if you wait too long, the little bit of damage that you have can end up being a lot of damage.
Point. Water.
Right, water, mold, you name it. These things can transpire, okay? So basically we say get the SBA loan, start your repairs, and when the operative word, when the insurance company actually pays off, take that insurance money and pay off that SBA loan. And now you don't have the loan because you paid it off. But basically you need to apply with FEMA first and then SBA, and at the same time contact your insurance company.
Why does the SBA get done so much quicker? Why are the wheels of process so quicker with SBA compared to the insurance companies? Is it because they have so many more clients, or is it just their way? You know?
A lot of time the insurance adjusters, let's say they'll have an astronomical amount of homes that they actually have to visit and do inspections on. So therefore their paperwork ends up, and then it's got to go through so many stages and so many channels before it actually comes down. And then you got to remember, it's got to get a final okay from someone that's actually writing the check to the homeowner. It's a longer process, whereas SBA's process is not that long.
Why are there some situations where someone might not be even eligible for FEMA in the first place, even though they've sustained damage from, say, a Sandy?
Okay, if you're not eligible for FEMA, then one or the other thing, either you're a business or you're a homeowner with good insurance.
Okay. So FEMA will decide, well, your insurance is good enough where they'll cover it all.
Right, and then FEMA will send you directly to SBA. And as I said before, SBA will cover uninsured, uncompensated losses.
Right.
Okay? Because the SBA home loan can go up to $200,000, whereas the personal property or contents is $40,000. And when it comes to the renter, okay, of course they can't apply for the dwelling, only their personal property.
What if they have renter's insurance?
If they have renter's insurance, the part that is uninsured, uncompensated, that's where we come in. We cover. See, because a lot of times your automobile may be in that realm of the tree fell on the car.
That's a good point. If you have the collision and comprehensive, I guess, part of the auto policy, that may cover it, right?
Okay, if you have that.
Right.
Okay, but a lot of people don't. They have the basic
Liability,
PIP, PD, liability, Okay, and so therefore you got to pay for a car. The car's, let's say, 6 years old. Okay, the car's still good, but the tree fell on it, now it's not. Okay, basically what the deal is SBA will help you out with that car, and our interest rate is 1.6%.
That's pretty low.
It is, exactly. Can you imagine having a car loan at 1.6?
Boy.
I know. As well as, let's say, replacing if you're the renter, your personal property, your TVs, your beds, table chairs, whatever, you know.
For
your
people that
stuff.
may not know, the SBA is a loan. So if your insurance check comes shortly after you get the SBA loan, basically you just pay the SBA loan back pretty much right away, if that happens.
Right,
Yeah.
because there is no prepayment penalties
Right.
on these. These are user-friendly loans, okay? And you get the SBA money. You start your repairs, start your replacements, you know, start putting your life back together as soon as possible. And when the insurance company, if there is an insurance company, actually pays off, yes, you go ahead and just pay off the SBA loan, and that's it, you're finished.
Did SBA come into existence because it was discovered way back when that the insurance process may take a little longer than people could actually wait to get their money or the FEMA stuff? And so this is a sort of a stopgap measure, a fill-in gap measure. It gets you your money a little quicker so that you can get on with your life, like you said.
It is. SBA came about in 1953, okay? And it came about in respect to help, the assistance. And that's the model that it still stands on, is assistance, to actually assist the disaster survivor in actually putting back, repair, replace, and it used to be a statement, in likeness and in kind. In other words, we want to put you back exactly where you were prior to this disaster. And it really makes a big difference to a lot of people. It actually helps a lot of people.
Absolutely.
And that's the good thing.
Now, Sandy, being a hurricane or a superstorm, as they ended up calling it, obviously hit shoreline communities. Now, most of them, most likely, because of where they were, and that's where the damage was from Sandy, probably most had flood insurance as well, because you kind of need that depending on where you live. It's required, right?
It is, but you'd be surprised a lot of people didn't have flood insurance. You got to remember, a lot of times when people's homes are paid for, and a lot of them are tax exempt because of age or what have you, a lot of people don't bother with the insurance.
Because they figure it's all paid for.
It's all paid for,
yeah.
You know, why should we keep? And you run into a lot of that in all my years of working disasters. You run into that very often.
Yeah. It seems like, at least around here, you know, something once a year. Obviously, last year, Irene, you know, Sandy this year. You can go back to Katrina, not in this neck of the woods, but you're always kept busy, aren't you? There's always something going on.
It's always something, and like I said, we like to move into the area fast, make sure everyone recovers as quickly as possible, and then move out, you know, get your stuff and move out.
Is your job very different now compared to maybe there'll be an extended period of time where there is nothing as far as disasters going on? Because now you're out in the field a lot more, I would imagine, right?
Right.
Yeah.
If there's nothing going on, then I'm home.
Okay.
Yes.
Yeah.
I'm home in what they consider non-pay status. I'm home.
Oh, okay.
Yes.
Oh, so then you're activated once disasters happen.
Exactly. I'm considered a disaster reservist.
Okay.
I'm only activated, like your military
Yeah.
reserve. We're only activated when there is a need for us.
Right.
When there's no longer a need, then we go home.
But you're also, during that time that you're home, you pretty much keep up on the changing, because, you know, the government has a tendency to always make little adjustments and changes and everything. So you, especially as the public affairs specialist, you need to be on top of it right when the change is made, right?
Oh yeah, we get memos.
Yeah.
And you get a daily briefing every day.
Do you?
Yes, you still get that even if you're on non-pay status. You still get all of that information.
You're
and
still
everything
kind of
comes-
working then, you know?
It all comes in, yeah.
Yeah.
Yeah, it's a good thing though, because therefore when you are called out, you understand and you know basically what's going on.
All right, let's take a break and come back. I want you to give out the SBA website and I guess the FEMA website too for people to go and learn more. All right?
Okay.
So
All
that
right.
would be FEMA.gov, right?
Yes, it'd be FEMA.gov and SBA.gov.
All right, go to the websites and learn more, especially if you know are affected by Sandy. We'll come back and we've got a lot more to get to. Beverlyn McDonald, she's the public affairs specialist with the Small Business Administration Office of Disaster Assistance. I'm Sean Murphy. This is For the Record. We'll be back. Welcome back to For the Record. I'm Sean Murphy. My guest today is Beverlyn McDonald, the Public Affairs Specialist with the Small Business Administration Office of Disaster Assistance. And as we taped the show, it wasn't that long ago that Sandy, Superstorm Sandy, or Hurricane Sandy, whatever you want to call her, came through, did a lot of damage in our neck of the woods, and of course, you know, and obviously in the greater New Jersey area. And we had already talked in the first segment about the very low interest loans to those affected. What was it,
1.6% interest rate.
Which is phenomenal. And we did touch briefly on businesses, but not that much. So let's talk about that aspect as far as people being helped by this.
Okay, when it comes to our businesses, basically, we have a cap at $2 million for our businesses. Those interest loans are 4%, okay, which the business loan can cover not personal property, but basically your P&L, which is your profit and losses, your inventory, furniture and fixtures, your basic everything. And then we also have an economic injury loan, which basically will help you out when your business had to be shut down because of the disaster. Then we assist with the vendors that you had to pay, even though your business was closed. Your employees, even though the business was closed, you still got to pay these people.
Right.
So basically, that's your economic injury. You may even be leasing the building. That's got to be paid.
Right. And this is very important. These things, those bills continue. You're closed, which means you're losing money, but at the same time, you're incurring expense by everything you just said: vendors, employees.
Right.
Maybe you're leasing the building. Those bills don't stop just because you're closed.
True.
True. And talk about for the business loans, the PNP, which is at 3%. That's another fantastic rate, by the way.
Okay. The PNP is the private nonprofits. Okay, the private nonprofits could be your museum, your zoo, your library, different
ones that are tax exempt in a lot of cases.
Yes, as long as it's private nonprofit, yes, we will do it. And a lot of times on just simple nonprofits.
Right.
Okay, it can be a community nonprofit, but it's still a nonprofit, and those are 3%. And basically, we will cover any uninsured, uncompensated losses that these will have, because a lot of times it's rehab centers and, you know, schools.
I'm so glad that, you know, as we talk about this today, because you hear a lot about homeowner damage, but it's great that we're able to touch on things like businesses, like the nonprofits, even renters. Let's talk about renters, because they can take advantage of this in some way with damage to their place.
Right. A renter can apply for their personal property. Okay. Of course, they can't apply for the structure or the dwelling.
That's owned by the landlord.
Yeah, that's the landlord. But everything that the renter actually owns can actually be listed as personal property, and SBA will uninsured, uncompensated, up to $40,000 for them.
Yep. So renters are not left out in the cold.
No.
Should they? And this is, and if you have renter's insurance, even better, which you probably should. It's always a good idea. And if that's the case, then the SBA, you know, offsets the balance of what's not covered on the renter's insurance. Correct?
Exactly. A lot of people, they get the basic insurance.
Right.
And let's say they only have a couple of $1,000s to cover their personal property. Well, sticker shock is going to sit in when they go and try to replace, let's say, the stove and refrigerator, if it belongs to them.
Right.
The bedroom suit for them, for the kid or kids, whichever. It runs up, and it's a lot of money.
Yeah.
And the thing is SBA will definitely, you know, help out with the uninsured, uncompensated losses up to the $40,000. And as I said before, the automobile can be included in that if your automobile is 1.6% interest rate, and also the fact that it was damaged and you only have basic insurance.
Which is the liability, which is like the state minimums.
Right, the minimum, and that simply says that you can put a tag on it and drive it.
Right.
If something happens to it, you're out of luck.
You have to pay for everything yourself.
Right, so SBA covers that.
You know, that $40,000 for personal injury, personal property, that's great. But the home loan is as much as $200,000, you know, for the structure and that sort of thing too, right?
Right. SBA will go up to $200,000 as far as your structure, dwelling is concerned. SBA will also, if there's a certain amount of loss, SBA will also assist you in other needs, you know, such as if you need to put up an extra footed or extra drain or something like that, that falls under the mitigation. SBA will help you out with that. So you get $200,000 for your home if that's how much damage you have.
Right.
See, our loans are written according to the amount of damage you have. We don't just simply say, okay, here's $200,000 because your house was damaged.
Yeah, you may not need that type of money.
Exactly. See, so what it is when our inspector comes out, our inspector does a report. And based on your damage, the loan officer in the main office will assess a monetary value to it. Then the loan officer will call you and the two of you will have a conversation. That conversation will be the amount that the loan has been assessed for, how long of a term, okay? In other words, your terms and conditions. Our loans can go up to 30 years, but let's say you only want, let's say your loan is only $25,000.
And you figure you'll be able to pay it off
right,
sooner.
Okay,
yeah.
And you say, okay, I don't want a 30-year on $25,000.
Right.
I only want a 10-year. So the loan officer will put those figures into the calculation.
Just makes your monthly rate different. That's
right.
all. Yeah.
That's all it's going to change.
Does the rate stay the same even if you were going to do a 30-year, or if you just wanted to pay that 25 grand off quicker? Is that rate, that 1 point whatever percent, does that stay the same?
That's your interest. That's set in stone.
Okay, so that does, it's not a varying rate. It's not fluctuating. Doesn't go up over the course of the 30-year.
Oh, no.
Okay. All right. Good.
No.
Yeah.
No. Once SBA and you and the loan officer get together, because like I said, they'll call you. The loan officer will call you and the two of you will discuss the terms and conditions of the loan. And let's say you find out that you don't even want $25,000.
Right.
Okay? You don't have to take the $25,000. Tell the loan officer then, I don't want 25, I only want 20. Fine. He'll take the 20 and make that a loan, and the other 5 no. And then there's also a thing whereas you don't have to take the loan at all if you find out later on you don't need it.
Okay, you can just say, you know what, I've discovered that this loan isn't necessary, so I'm going to either give it back or just decline it altogether.
Exactly. See, this is the thing. We tell a lot of people, take the SBA loan and use it as a just in case.
Right.
Okay. Let's say you're a homeowner, you have homeowner's insurance, okay? Or in this case, most people, flood insurance, okay? You got flood insurance. FEMA helped you with staying at a motel or wherever it was that you had to stay because flood insurance does not cover this. Okay, now you've applied to SBA. SBA is granted you a loan, okay, to actually cover the repairs and everything. Let's say you got the first $14,000 and you decided that the insurance money came in, and with the $14,000 that SBA gave you, okay, and the insurance money, you can do everything that you need, so you don't need anything else.
So you go stop with the rest of the money.
Stop with the rest of the money. Call SBA and tell them, look, I only needed the first 14. With the insurance money, we
pay this back. Yeah.
We can fix this off and everything, and then you let your case manager or loan officer know at that time, and he'll recalculate it, which is a loan modification, and let you know what your new payments are. You tell him then, oh, instead of that 10-year that I told you before, I only want it for 5, and then it's done. And then they send you the new paperwork, you sign it, and you send it in, and after 5 years, it's paid off.
What happens as far as an SBA loan? What happens if a person happens to be unemployed when the disaster happens? Are they even eligible for that loan? Or how does that work?
That's on a case-by-case basis.
Okay.
Because of the fact that we don't know what other assets.
That's right.
And your credit worthiness and your payback ability. It's a lot of things
and
go
what the
into
insurance
that.
would cover in the first place, and FEMA and all that.
Exactly.
You know? Yeah.
Exactly. That's the whole thing. See, it's a lot of variables that actually go into actually processing the loan and coming down to a bottom line.
Yeah, and the thing that people have to realize, unlike the insurance, which just pays you money, and FEMA, which pays you money. The SBA is a loan, so that's something that you'll have to eventually pay back. It's there designed to help you get the money that you need quicker in case you're in a real jam, because the insurance may take longer,
Right.
or the FEMA takes longer. But this is a loan that you'll have to pay back. So your ability to receive income will has to play into you even getting an SBA loan in the first place, right?
Right.
Yeah.
Right. Like I said, that's on a case-by-case basis, because really have to look into the background and the assets and everything else.
Yeah, and I asked that question because of the times that we're in, the economy that we're in. You're more than likely to bump into a person or two that might be between jobs or underemployed, or something along those lines, and we don't control when a Sandy happens to come along in our lives.
True. If by chance SBA determines that you cannot afford a loan, or the fact that that loan would create a hardship to you, then basically what we'll do is we'll refer you back to FEMA, okay? And FEMA has other organizations and everything, other needs, it's called ONA, other needs assistance. And basically, once we refer you back to FEMA, FEMA will assist you in many other ways.
Now, you're active now because Sandy just happened. How long do you think you'll be active dealing with just Sandy-related issues alone, assuming that some other disaster doesn't come along anytime soon? How long will this keep you busy for?
That's hard to say. Each disaster is different.
Again.
Everything's different. Nothing, although a disaster is a disaster, each one has its own little particulars that you really can't say, oh, this is going to happen or that's going to happen. You really and truly, so I have no idea.
Do you enjoy your job? Do you enjoy being able to help people, inform them, letting them know that there are other options out there? Because, I mean, in times of need, when someone's, house is destroyed or at least damaged, they're just so distraught, And someone like you can come along and just give them hope, even if it's an SBA loan,
Sure. I enjoy my job. I started doing this in 1992, Hurricane Andrew. As a disaster survivor myself, I made myself a promise that I wanted to be like that lady that sat on the other side of the table that actually gave me the information and helped me. That's what I wanted to do.
You are that lady on the other side of the table.
And so now I am that lady, yes. And after 20 years, you wouldn't hang in there for 20 years if you didn't like it.
There have been a lot of changes in those 20 years as far as procedure and things. The ability to be able to help people has probably improved greatly, wouldn't you say?
The ability to, yes, exactly. The ability to assist has changed because we could do it faster now. Because when I started, we didn't have computers.
The internet.
We had the big brown folders, and everybody had a piece of paper, and it stacked paper and file cabinets, and we had to have one floor just for the files alone. Now with everything in a computer, it's much easier, and we can get information across from one department to another a lot faster. It is a lot easier.
Thank goodness for that. We're going to put the SBA and the FEMA websites up on the screen again. We're out of time. Beverly McDonald, we are Public Affairs Specialist with the Small Business Administration Office of Disaster Assistance. A good time to have you on the show, so thank you very much for coming on.
Thank you for having me.
And thank you for joining us for another edition of For the Record. Be sure to view this show and many others on our YouTube channel. I'm Sean Murphy. This is For the Record. We will see you next time. Take care.